All right, so there is a lot going on right now in the world. Silicon Valley Bank collapse. This is what's been all over the news recently. We are going to get right into it today. My name is Dan Parker with Best Life Home Team, your San Diego real estate resource. And just as a reminder, when we're going live, make sure to let us know down in the comments where you are tuning in from. I love to see where people are tuning in from. I have people from all over the country. I have some clients from Canada. I have people all over the world tuning in. So let us know where you're tuning in from. And as always, on a topic like this, I like to bring in someone who knows a heck of a lot more than I do, because I can be a dummy when it comes to big things like bank collapses. And today we have on my very good friend, Danny Drysdale with Intercap Lending. Danny, thanks for joining us. We appreciate it.
Thank you, thank you, thank you. I would not say that I am smarter than you. I just pretend to know more. That's what I would.
Whatever you're doing, it works. So I appreciate that. I appreciate you taking time out of a busy, busy day to come help us out
Absolutely.
and tell us what's going on.
Excited to be here. Absolutely. I love talking about this stuff. If you follow me on social media, you've seen that I've been posting about it since Friday, and it took over my weekend. So
Yeah. And by the way, Danny does have a great Instagram account where you do break this kind of stuff down, and you break it down into a way that just is really easy to digest for the average person like me. And so if anyone wants more information on this kind of stuff, make sure to follow Danny on Instagram. We're also going to link your YouTube channel down below as well. So more info to come
great.
there. Right now, Instagram is where it's all at, but also check that out as well.
Yes, for sure.
So this is what we're talking about. Well, this is a very interesting one. U.S. is said to open investigation into Silicon Valley bank collapse. Before we get into, I guess before we get into this article, Danny, just give us, like, this isn't a video on what exactly happened, although we will do a quick little breakdown on that. We really want to talk about how's that going to affect what's going on here locally here in San Diego. How's that going to affect the housing market? I think people are going to be really surprised at what's going on, especially in the short term. But Danny, could you give us like a really quick rundown as far as what happened and how did this bank, which was, I think, the 15th largest bank in the US, how did it collapse?
Absolutely. Absolutely. Yeah. So ultimately, in a very, very long story short, um, with Silicon Valley is a basically a venture capital bank out of the Bay Area, where there's a lot of different tech firms, and if you've been watching the news, if you've seen anywhere from Google to Apple to multiple different companies, tech companies, there's been a lot of layoffs, and so in those situations when a certain sector is hit hard, there's people that are accessing cash and accessing things that they maybe wouldn't if they didn't have the situation that was at their present time. So in that situation, Silicon Valley Bank and a lot of the people that had funds at Silicon Valley Bank wanted to access more money. And
Which is a
Silicon
lot of
Valley,
startups, right? It's a lot of
which was a lot of
startups.
startups.
Yeah.
Yes, exactly. And so Silicon Valley Bank was in a situation where they were under the FDIC. Basically, banks don't need to have all of the money that we deposit with them available 100% of the time. So, according to the FDIC, they need to keep 10% accessible, right? The other 90% they can invest and essentially make money on as they're holding that money for us. Well, when they get up to those 10% thresholds, they're needing to access more of that money. What has happened with interest rates as far as the Fed funds rate and the Federal Reserve raising the Fed funds rate? When the Federal Reserve raises Fed funds rate, they're essentially raising the rate at which banks lend money to each other overnight. And so one of the things that they did, now this is what's the investigation is pending and what they're looking into, whether it was handled correctly or not. But ultimately, the banks had a lot of treasuries and a lot of assets with very low interest rates associated with them. Now that interest rates are higher, they had to access funds by selling some of their assets that they had. Well, because they're selling them with such low interest rates associated with them compared to the current rates, they actually had to take a big loss on those investments. And so the bank ultimately lost a lot of money. Now they disclosed that they lost a lot of money. And once again, there's more into the investigation of how this has all been handled. But because of the process and how that all happened and fell, kind of went down, it caused a lot of potential turmoil in people. And they're going, gosh, if I'm with smaller local banks, do I need to potentially withdraw my money? Is it scary to have my money with other banks? So over, come Friday and over the weekend, we saw other small local banks, Western Alliance Bank, Signature Bank in New York, which actually did get shut down as well.
Yeah.
Those kind of things. People, the consumers, were going, oh my gosh, we need to get our money out, which is what they refer to as a bank run. And so,
Yep.
a run on the banks. And in those situations, that's not good for anybody. So what has happened come full circle, and how this kind of affects the mortgage industry and real estate industry in general, is the Federal Reserve has really been, and they kind of have this, they have this, this vision in a lot of people's mind that they're old and slow, that they're slow to react in certain ways, that they're slow to do certain things. And they really want to try to correct that perception. And so their job is, they have a dual mandate, and their dual mandate is one, for price stability, and two, for full employment. Now, we don't have price stability right now. That's what inflation is. Inflation has been going up pretty dramatically. It's starting to come back down, which is a good thing, which is why rates are starting to come back down, and we're seeing things normalize.
Wait. We haven't gotten there yet, Danny.
Okay, sorry. But
Well,
so,
hey, let's take a quick break, because I just want to show people what a big deal this is. If you look at total assets of failed U.S. banks by year, this was a really big deal. There were a lot of assets in this bank. Now, the reality is, what's happened since then is the Federal Reserve has really stepped in, and maybe you can kind of explain that a little bit.
Exactly. So that's what I was about to say, is the Federal Reserve wanted to correct their idea and their thought that they are old and slow. They have a dual mandate, but they wanted to make sure their third piece of all of this is they don't want to create chaos in the markets, right?
Yeah.
And so they're trying to have stability, and they're trying to have full inflation, but they can't have chaos. And so they actually got together, the Federal Reserve and the FDIC got together in an emergency meeting on Sunday, and set out a new plan of how they were going to make sure that people within Silicon Valley Bank and how assets that were held there would be handled. And I think in a lot of ways, it was actually a wake-up call to the Federal Reserve of how aggressive they've been raising rates, the Fed funds rate, because ultimately there's many things that associated, or that kind of led to this through Silicon Valley Bank specifically, but in part, the losses that they incurred were due to the drastic increase in interest rates recently. So I think it was a little bit of a wake-up call for them.
Yeah, and I think we're going to get into that point, I think, a lot more, because that is a very good point, and that is kind of what I was saying in the very beginning, how I think people are going to be surprised at how this is going to affect the housing industry, especially in the short term. But take a look at this here, and this is kind of what you were talking about, is this was from U.S. Department of Treasury, and they said on Sunday, and this was the big concern, right? That only, was it $250,000 is federally insured. So the question is, okay, all these startups, if they only have access to $250,000, that's going to be a real issue. And so the Treasury came out and said that depositors will have 100% full access to all of their money starting Monday, March 13th. And the reality is, it's not like Silicon Valley Bank didn't have any funds available. It's not like they didn't have any. They didn't have the assets to pay people back. They just didn't have the liquid assets to pay it back immediately. Yep. So this is a big deal. This is basically a bailout. There's a bailout saying, hey, the government's saying, look, we're not going to allow the economy to get hit really hard because of this. And then, like you were saying, now the question starts to turn into, okay, what was the result of this, or the reason for this? How did this happen? And how can we prevent it from getting worse in the future? And I know we've been talking a lot about Jerome Powell over and over and over again over the last 12 months, right? That's been a big topic. He's been all over the news.
Yeah.
And I mean, I feel like he's been saying since day one that he's going to continue to raise the Fed funds rate until something breaks. And it sounds like something broke. So things are going to have to change.
Yeah, exactly. Yeah. And that's the interesting thing, right? All along, they said they set a plan out of how they were going to address inflation, what they were going to do, and really where this started and the difference of things as it ties to mortgage rates and the real estate industry. Rates were moving in a good direction. Inflation peaked in about September, and it peaked around a little, the core rate lower, but the rate through the CPI report was around 9.5%.
This is good.
Now,
I have like everything ready to go that you're talking about. Like,
amazing.
how
I love
perfect
it.
is this? We didn't even plan
Good.
this.
So inflation's coming down, and inflation, you've heard me say this before, but inflation is the biggest enemy of long-term debt. Because if you're devaluing the dollar, or if it doesn't go as far, then that's the biggest struggle that you have in that situation. As inflation comes down, interest rates, specifically meaning mortgage rates, because that's a long-term debt, are going to follow inflation. So inflation was moving in a really good direction. Where things kind of got turned on its heels recently was there was a jobs report that came out the beginning of February. And that turned around, and everybody was a little bit spooked because what people thought was that the Federal Reserve, and there were even comments made by Jerome Powell about this, that they were not going to stick to their plan, that they might need to get more aggressive with their rates and what they had previously said, what they had set out to do. So that caused mortgage rates over the last 45 days or so to increase pretty aggressively over the last little while. There were a lot of different things. What they had said originally is that they were going to make, in the next 3 Fed meetings that they have, they were potentially going to raise rates 25 basis points as, the economic indicators detail out and explain things. They're going to raise 25 basis points for the next 3 meetings or so, and then be able to see how things happened. Well, when that jobs report came out, the market got spooked. They thought maybe they're going to have to get more aggressive with interest rates, and they're going to have to raise them even higher. Jerome Powell even said that on Tuesday, not last Tuesday, the Tuesday before, and then he reversed his comments on Wednesday, and you're going, wait, what's happening? What's going on? What are they really going to do? So it created a lot of instability in this situation, and with what's happened with inflation, and more so with finally the straw that broke the camel's back is Silicon Valley Bank and some of the chaos it started to cause, right? So the Fed really kind of had an ego check, and said, you know what? We're going to stick to our plan, and maybe we're even going to back off that a little bit. We're going to be a little bit more reserved in the way that we do this. Let's just see what actually happens. Because when you look at inflation, so much of the inflation reports and so much of the CPI reports and the data that comes out in that is a lagging indicator. So there's different lagging elements of that. Like, for example, housing, shelter costs are roughly a third of what inflation and the CPI report weights, right? When they're weighting different things. And the shelter costs, come May or June, come the summer months, everything will have finally caught up with where it needs to. But it's like a roller coaster. And the front of the roller coaster is real time of where things are. And you're at the hump. The last piece of that roller coaster is where the CPI report is. That needs to get over that hump before we're really seeing inflation come down, and we're seeing real time look at what's happening with the rates that they have raised and what effect that's having on real inflation in the market today.
Yeah, that's a very good point. I wanted to pull this up because I think it's interesting. Oh, I lost you. How about this? Senator Warren urges Fed Chair Powell to recuse himself from review of Silicon Valley Bank collapse. I'm sorry, I can't talk there. But, there's a lot of pressure out there saying that and like you were saying earlier, that the pressure from the Fed of increasing the Fed's fund rate over time so fast has really caused this collapse of this bank. And so, yeah, I think we are in this situation to where it can't continue on like this. We're going to see things change, and we're going to show you guys some things that we're already seeing. So we've kind of spoken a little bit about mortgage interest rates. So this is, and I don't know where they're at today. You would know better than me, but I mean, yesterday we've actually had a huge drop in mortgage interest rates. And so my understanding, and Danny, tell me if I'm wrong here, is that it's because we know that Jerome Powell came out about a week ago and said, "Oh, inflation is bad. Inflation is still bad. It's getting worse. We're going to have to continue to be even maybe more aggressive," hinting at a higher increase on, was it the 20th is when they're going to announce the next rate hike,
Correct. Yep.
potential
Yep.
rate hike. And
Yep.
then through this whole situation, now they're saying, and like pretty much nobody expects, there's very few people that expect there to be a large rate hike, potentially no rate hike at all. So
Exactly.
when for mortgage interest rates, they're looking ahead at the future and they're saying, okay, we know that the Fed is going to continue to increase over the next 6 months, the Fed funds rate. And because that's not happening, now mortgage rates actually react the opposite way, and they're starting to come down, which is really good because, and I think this is probably where we should segue and really bring this back to housing here in San Diego. And like, oh, okay, let me pull this back up. I'm going to pull this back up and we can talk about this. So let's bring this back for 6 months. So what we've seen here in San Diego County around May of last year, well, beginning of last year, rates started to come up. It wasn't until about May when buyers finally started to say, "We've had enough. We're just going to sit this. We're going to sit on the sidelines for a little bit and see what's going to happen."
Exactly.
May through December, like it was crickets out there, and we saw a steady decline around 2% every single month of median home value in San Diego. And the reality is, if we had more homes, which is the crux issue that I always go back to, that could have easily been 5% a month, but it wasn't because we don't have the homes available.
Yep.
Beginning of this year, it started to seem like a gold rush again because, as you can see on this map, right around January, end of January, we really started to see rates start to come down again.
Yep.
And so we had probably a good 6 to 8 weeks. In fact, in February, because the data is always delayed about a month. In February, when you're looking at closed sales statistics here in San Diego County, the median detached home went up by $50,000. It went up. Everyone was thinking, "Oh, the market's going to crash." The market is crashing. All the headlines are saying January sales are the worst ever. Yeah, because those closed sales in January got an accepted offer in December, which was like the slowest, quietest month ever here in San Diego County.
Exactly.
And then we started to see things slow down again. And that's what we've seen over the last couple of weeks. So now the question is, where are we at and what's going to happen moving forward? And our buyers or potential buyers out there, how much of their motivation is just based off of affordability and mortgage interest rates? I think that's what we're going to have to see next. And what do you think is going to happen?
Yeah, you bring up so many good points, and I gotta really give you credit for how much you educate your followers and educate your base of people that are looking at this and understanding how this actually relates to San Diego specifically, right?
Yeah.
Because there's a lot of information out there, and almost all of the news and the media is talking about everything nationally, right? And San Diego specifically, and you have posted so many videos about this of why this is a little bit different than a lot of other markets, right? But what we're actually experiencing right here in San Diego right now is, I mean, it's the most basic economic rule of all time: supply versus demand, right? If we don't have enough supply of something, the demand is higher. If the demand is high and we don't have enough supply, that's going to get more expensive. That is exactly what's happening. It really is happening nationwide as far as homes. I mean, if you look at it, we have less than 1 million homes for sale nationally right now, but they count those numbers, and in those numbers, they actually count homes that are under contract as well, pending sales. And so when you take that out, we actually have less than 600,000 homes for sale nationwide.
That's
In
wild.
2008, in the crash, we had 4 million homes for sale, right? So, and it's kind of gone down and down and down since then. So, really, when you're looking at things, but specifically to San Diego, I mean, we just don't have enough supply. As interest rates and what's happening or what's projected now, I wish you and I both had a crystal ball, or at least one of us we could share with each other. But as interest rates will come down as inflation comes down. Like I talked about, those shelter costs that are catching up and some of those other pieces. There is so much data to show that interest rates will come down. Will we see COVID rates before or COVID rates again in the 2s and 3s? It's probably not healthy if we do in the near term, to be honest with you, but they'll come down from where they are right now. And as rates come down, a lot of those people that you mentioned in May said, "Ooh, give me a second, let's wait." They're going to get off the fence again. They're going to get back in the game and they're going to be looking for homes. If we don't have enough homes, there's no other option but for sellers to take advantage of that opportunity and home prices to go up, right?
Absolutely. And I mean, from my experience, it's of course the affordability is an issue. Like when you go from 3% mortgage interest rates to 7%, you're talking about 50% less affordability, 50% more expense on your monthly mortgage payment if you're putting 20% down. That's no small amount of money when you're talking about prices here in San Diego. But what I found is it's probably, in my experience, it seems to be more people that are just waiting to see what's going to happen with the market. And they're just hesitant. They really don't want that 7% rate. 7% really seems to be the number over the last year and a half where people are starting to be like, ooh, yeah, maybe we'll just wait and see what happens.
Yeah.
And so it's interesting because we just keep like teasing that 7% and then we go down and we tease the 7% and go down. And I think you and I
to your
can
point, sorry,
No,
to
you're
your
good.
1% difference when we saw them go from, we were teetering up the 7%, but when we dipped down into 5.875, it created a frenzy. People were like,
Yeah.
okay, this is great, right?
Yeah.
It's not that they need to get back to 3 or 4% to people feel comfortable. And that's why when you talk about there's a big argument, there's a big debate in our side of the world when it comes to mortgages right now of, is there an interest rate lockdown? Meaning, are you locked in your home because of your lower interest rate, right? Now, and where the argument or the debate comes from is, yes, interest rate is one piece that controls affordability, but there's multiple other pieces that control or are a part of affordability as well. Obviously, the value of the home, the price of the home, multiple different things. So you need to be able to take a look at all of it and come up with a good understanding, because really your interest rate is only as relevant as the payment that you're paying on a monthly basis, right?
Yeah.
And so there's different tools out there. There's different things that you can utilize to get in a little bit more competitive situation in the short term so that you can actually afford homes now and be able to take advantage of things before there's an all-out craziness as more people come off the sidelines down the road, right?
I'm sorry, I
In
probably keep
general.
distracting you with my frozen face over here. I can still hear you. I'm trying to
Okay,
get a
good.
face.
I'm glad you can still hear. You're looking at me, which is great. I like it.
Yeah, that's good.
But so ultimately in that, in that situation, as interest rates come down, there's just going to be more people. We're going to probably see a lot of the market like we saw at the beginning of 2022 when there were so many people fighting for the same few amount of homes, right?
Yep. And now, well, I'll actually be a contrarian here a little bit and say the rate that you have, it's not just how much money you spend every single month. The other factor, which is like we just closed, you helped us close on a house 2 weeks ago. And the other part of this equation is, look, I'm hoping that I'm getting a little bit of a discount right now on the purchase price because of the fact that there are fewer buyers out there. And the hope is that we're going to get a lower interest rate in the next 12 to 18 months where we can refinance and bring that down even more. So I think that is another factor, but it's a more of a beneficial factor for buyers, a potential beneficial factor. But we both know, being in the industry, it's very unrealistic that that's not going to happen.
Yes, correct. Yep, absolutely.
And I just want to mention
AF right now.
Clark. Yeah, exactly. Clark Smith, feeling educated AF right now. Thanks for tuning in and hanging out with us, Clark. I really appreciate that.
Thank you, Clark.
And our friend of the show, Ross, is asking, why are there so few homes for sale in San Diego? Very good question. And there are two main answers on my end, and I'm sure Danny probably has like 5 other things that he can bring up as well. The two things, and here I'll share this screen real quick because again, this is what we always come back to, is inventory in San Diego. So this is how many homes are available, attached and detached properties in all of San Diego County. And currently we're at 2,500 homes. This is a county of 3.35 million people. Last night I was hanging out with my friends who are real estate agents, real estate professionals in Austin. Check out Jeremy Knight. He's been on, friend of the show. He's been on the channel before. He has a great channel about Austin. Austin has a population of just under 1 million people, and they have, I think he was saying they have at least 2 to 3 times as many homes for sale as we currently do. And that's what's like across the country. So part of this is, look, we're obviously, this is a very desirable place to live. That's why there's a lot of demand. There are still people moving here, even though people are leaving California. There's still people moving to San Diego. We're getting people from Silicon Valley. We're getting people from other large metros around the country. And then the other thing is that home builders stopped building back in the 2008, 2009 housing market crash. They stopped building, and we have not recovered from that. The government here in California, they've been pushing so much policy to try and get more properties to be built, more units to be built, whether that's changing zoning from allowing old strip malls to be turned into apartments, into condos, allowing homeowners to build up to 4 units, local government dropping the cost of building an ADU, an accessory dwelling unit, onto your property. They're running out of ideas, which is kind of funny at the same time, because they also have so much red tape. It's also the hardest. It's got to be the hardest state to actually succeed and be profitable at building. So it's like these opposing forces that make it very, very challenging. And the one other thing that I will add on there as well, Ross, is that one of the other big reasons as far as right now why inventory is going down instead of going up like it normally does this time of year is because of the interest rates. Yes, interest rates is affecting demand of buyers, but guess what? Most sellers are going to be after they sell their house. Oh, another great freezing moment. Guess what sellers are going to be after they sell their house? They're going to be buyers. And they don't want to lose their 3% mortgage interest rate to buy something with a 7% mortgage interest rate. So that's really stopping them from wanting to buy houses. What else you got, Danny? You have to have something else.
No, I agree. I think, the only thing to kind of piggyback on that is when I talked about San Diego specifically, but to your point, we're having a lot of people move in. And I know the national media, once again, they do a great job of saying people are leaving California, right? I'll tell you, and we've helped a lot of clients together that have been moving in from all across the country, especially as COVID happened. And the truth is COVID changed the way that we are going to work and the workplace environment for the future. And in that sense, there's a lot of people that are now working remote and able to move where they want to move. And we've had a lot of people and helped a lot of people to be able to come and move here. In addition to that, when you're looking at San Diego specifically, geographically, we have some things that help us and help stabilize our housing market a little bit differently. We can't build any further south. We have a border. We can't go any further south.
Yep.
We can't build any further west. We have the coastline. We have water, right? And really, we're bordered on the north end as well by Camp Pendleton, right? And so when you actually look at what it is, we have a very desirable area that is locked in a certain geographic amount of square miles. And so when you're looking at that, in addition to that, we also have some very, very strong elements specific to the San Diego market that are always going to insulate us a little bit more. The military population. I think the statistic is 1 in 6 people in San Diego County are veterans, have the ability to use VA benefits, right? From the loan side of things. That's a
Navy is the number 1 employer of the city of San Diego.
Yes. Right. Yep. Exactly. Yeah. So you've got the military, you have the school system and the healthcare system. The hospitals and the school system here are unlike so many other areas. And the research that's done here, all of those different things. So when you have big elements like that and big sectors of the economy that are going to happen and they're going to be here come hell or high water, then we're going to be insulated from a lot of things, right? And so
those are good points. I like that.
So there's just things that you have to look at differently here. And that's one of the reasons why I moved to San Diego 12 years ago. But it's one of the reasons why it's so good to, yes, home prices are higher here, but also the investment aspect of things can grow so much more here than in a lot of other areas.
Yeah, I mean, we don't see as many first-time buyers here because a lot of people are taking equity from another house to buy a property here in San Diego. I mean, that's just the truth.
Yeah.
The other thing I wanted to mention as well, which I think is a huge benefit for people living here, and part of the reason why people want to live here is, yes, like the geography makes it difficult to build more, but we also have a lot of public space that cannot be built on.
Right.
So we have all these different parks, we have all these different hikes, we have all these different, we had to have some small lakes, we have a lot of public space throughout San Diego County. That's why when I get people reaching out saying, Dan, I want to live somewhere that is next to a really good hike. That's very important to me. I'm like, okay, cool. Drop a pin on a map. It doesn't matter where. You're going to be next to a
You'll
great
be
hike
there. Right.
throughout the county.
Yep.
And it's a good and a bad thing because, sure, we do need more housing. But oh my gosh, this is killing me. Sorry, guys. I thought I got this fixed, but I think the new house, we just moved into a new house and now we're all messed
My
up again.
favorite is the lag time where it catches up and then you talk really, really fast. I like that.
Is that what's happening? Oh
Yeah,
man,
a little bit.
dang it.
It's
All right,
good.
we'll get this fixed for next time. Appreciate you guys hanging on to this. Yeah, we even had, we're going to try to give you guys more information as far as what's coming soon to San Diego on these lives as well. I don't want it to all just be about housing talk, but this is such a big topic today. And I knew Danny was a perfect person to bring on, and we could probably talk for hours on this topic, but I know you don't want to watch my face freeze and my voice speed up 1,000 times throughout now and then. But we did get another good comment from UW Madison. UW Madison, seems like new builds are always targeting high income earners. It seems like San Diego is not affordable for middle income earners. I'm afraid for my kids and the future generations. Yes, I get it. I get it. It seems like every new construction in San Diego is like luxury condos, luxury single family homes. I think there's kind of two parts to it on my end. Again, I'm sure Danny will have some really cool perspective as well. But like when you're looking at how difficult it is to build here in San Diego, how costly it is to build here in San Diego, how much red tape, how many delays, how many different fees there are for developers. A lot of times when they're building homes, the only way that they can make that happen is by getting a very high price point. Like the cost of construction and permitting and all those things is very, very high. And so in order for them to not guarantee, but like come as close to guaranteeing that they're actually going to make a profit, they usually have to charge so much money that they kind of they're getting into that luxury realm. So they're going to add that onto the name of what type of property that is. So we are seeing that a lot. We are also seeing, and I just wanted to share this real quick. This was actually an article that I did pull up today. So thank you for asking about it. Is survey measures home buyer preferences. And one thing that we're noticing on home buyer preferences here in San Diego is that a lot of, especially like younger and millennial home buyers, they need less space or they want less space. They aren't looking for 3,000 square foot homes, which is good because we don't have a lot of those here in San Diego. But they're looking for smaller, maybe like 1,500, 1,600 square foot, 3-bedroom homes with very usable space, some usable outdoor space, some usable kind of public space. And I think that is the future here in San Diego. This and like mixed use. I think people are going to have to get more used to, especially for your starter home, your first home, to get into the market, buy an attached property, a condo, a townhome. Like they're still going to appreciate in value. You're still going to get equity out of that. And then you can kind of ratchet up to the next property. So I think that is kind of the future in San Diego. And here's a perfect example. Well, this is maybe an extreme example of the micro apartments in Hillcrest, the Little Jewels. And these units are, if I remember correctly, 600 square feet ish, 469 to 530 square feet. And then, but they're trying to be conscious of, hey, we still want people to enjoy and want to live in these homes. So they're making 12-foot ceilings. They're doing ceiling to floor to ceiling windows so that you get a lot of extra light. There's a lot of storage space above the fridge and different places like that. There's more public space throughout the building. And again, this is maybe an extreme example, but it is something that I think we're going to see more and more of here in San Diego. What do you think, Danny?
Yeah, no, I agree. I think they're going to change. They're trying to change a lot of those things. Like you said, there's a lot of red tape. It takes a long time to fix or change one of those things. One of the things that I think is always important to remember is home builders, their job is not to provide affordable housing, right?
Yeah.
There's different entities and organizations. They're for-profit organizations. They're for-profit companies. So the fact that they don't, the fact that there's not a lot of homes for sale, or the market is in high demand and that they can charge more, that's what they want,
Yeah.
right? In this situation where they haven't built enough homes over the last 10, 12 years, um, I mean, it's created a really good opportunity for builders in this current environment. But there is some regulations that are happening. There are some things that are coming where we're trying to make housing more affordable, and we're going to see that down the road. It just takes a while to get there. Like you said, a lot of that is going to be attached homes, multi-family housing type of scenarios. Um, but that will come. It's in motion as we speak. It just will take a little while to get there.
More than a little while. A lot of these developments,
Yeah.
it takes 10 years to get off the ground. And when we're
Yep.
looking at what's coming ahead, like I'm not seeing anywhere near enough the amount of homes that we need. Nowhere
No.
near.
Yeah.
So it's tough. I wish we had more answers for people, but I do really like the opportunity in places like Mira Mesa, over in University City, where they're trying to change zoning to allow for more higher density, and hopefully doing it the right way. I think Little Italy, I talk about it all the time because I think it is like the number one model. Everyone, if any area is thinking of increasing the density, that's the model. But if you look somewhere like Mira Mesa, which is, all these different shopping centers, that these big shopping centers, the strip malls, like we don't need those anymore. That's
Yeah.
a
Right.
lot of them. A lot of these places are going out of business, and everything's so spread out. If we had more mixed use, I think there could be a great opportunity there.
For
Uh,
sure. And
and
to
then,
UW Madison's point, oh,
yeah,
sorry,
no, go
her
for it.
previous point, about the cost of new builds and some of those different things, being scared for your future generation. Honestly, and this isn't a sales pitch, this isn't trying to sell you hard on something. The reality is the best way to provide an insurance policy for the next generation is to buy real estate.
Yeah.
Because when you actually look at things, you look at what's going on with real estate right now, there's so many statistics that show that when you look at what the safest investment is, whether it be right now or whether it be in a recession, there's a lot of talk about we're going to be entering a recession or in a
Mhm.
recession already. Real estate is the safest place that you can put your money. Real estate gives you the most benefit, the most bang for your buck. It's tough to be able to get in, but if you buy real estate now, that will help build that wealth for that future generation.
Yeah, great point. And easier said than done in a lot of situations, especially
Absolutely.
here in San Diego.
Absolutely.
But again, I think people just need to start thinking a little bit more modest for their first opportunity.
For sure.
And we need to be teaching our kids more from the beginning about the importance of savings, and allowing yourself to get in a situation to be able to invest in real estate, and live in real estate. Like that needs to be more of a focus up front.
Yep.
Um,
The
and
first
there is going
condo
to be
that
more
sold
opportunity.
in North Park was like 560 square feet. It was the same, right? Like
Yep.
there's that element of things, and we all want we all want this dream home, and we all want to be able to do that. There's other elements associated with that, but your first home, and maybe not even your second or your third home, is your dream home, right?
Yep.
It's a step in the right direction to get there.
Absolutely. Well said. And then UW Madison also said, if you were an investor looking for a rental property here in San Diego, what areas would you look for a positive cash flow? Danny, I'll go second this time. I'm curious to know, because I feel like this is a question that comes up a lot on the lives, and I love to know what your thoughts are.
That's a very tricky question, because as home prices are higher, and especially in this market right now, right? It depends on whether you're financing any of the property or what you're looking at. But for positive cash flow, if you're financing the max amount that you can finance on an investment property, you're going to be very hard pressed to find any sort of positive cap rate or positive cash flow right now anywhere across San Diego. There's definitely pockets that are prime opportunities that are going to go through some really good revitalization and some really good increases over time, and you can definitely speak to those specific areas a little bit more. But as far as finding a property that cash flows, I think cash flow is relative depending on whether you're financing it or what you're looking for, what that actual cash flow means. You know what I mean? But it's tough. It's tough in this market. You could buy a 4-unit complex somewhere in Nebraska and cash flow way more, but the potential return on the
Yes.
appreciation of that property isn't near as good. So it's
Yeah.
always kind of juggling both of those different things.
Yeah, and I will first start with a resource for you guys. First of all, head over to Bigger Pockets. They're going to give you all the information you need about real estate and investing. Also, some crazy ideas and things that you probably shouldn't do, but it is a fantastic. It's got to be the number one resource for real estate investing. Another thing I can recommend is AirDNA is a good resource to go on and just start to get an idea of how much cash flow you can get for a specific property. Specifically for short-term rentals, this works really, really well. Now, of course, you have to be very careful for the short-term rental rules that are in place throughout the U.S. and in each individual city and districts and whatever. They all have different rules. And if they don't have rules in place, that actually might be more of a red flag because they're probably going to get them in the future. And you want to know what's going on there. Danny's 100% right. If you're looking for a property to purchase today in San Diego County, put 20% down. Purchase it with the means to invest it long term and cash flow on day one. Probably not going to happen in San Diego. That's the tough part. It's probably not going to happen in San Diego. There are other places around the country where you can make that happen. Here in San Diego County, the big business is flipping homes or finding a house that you can easily add a second unit or a accessory dwelling unit or maximize the zoning one way or another. A really good example of that is, let's say you find a house with a detached garage and you can convert that garage, let's say $150,000, $200,000 into a nice, super livable accessory dwelling unit, then that's going to be your biggest opportunity. Or finding properties that you could put, I like to call it forced appreciation. So do some type of development to the house, tear down a wall to be able to add an extra bedroom and kind of section off a house. There's different ways. You kind of have to get creative here in San Diego. Let me put it that way. You kind of have to get creative because, again, if you're looking to just buy a house, rent it for 12 months at a time, put 20% down, you're probably not going to cash flow. Yeah. But I guess I'll add real quick though, the areas that I recommend. I have a video for the top 3 areas to buy an investment property here in San Diego. And so I think Rancho Bernardo is really good because there's a lot of tech going in there. Although I guess I don't know if that's going to be changing over the course of the next 6 to 12 months. Maybe that's one that not as sure about right now. Oceanside is definitely going to be another area. I talk about it all the time. Oceanside's a really, really great area because I think there's so much opportunity there. There's always going to be demand because you have Camp Pendleton, which is the largest military base on the West Coast. And then another place, Mira Mesa is another really good option because, and this is a longer play because they are in the process of changing zoning and turning it into more of mixed use properties, mixed use communities. But we're talking 5, 6, 7 years down the line. So it's a little bit longer of a play. And then University City. I think University City is a no-brainer, less risk, maybe not going to appreciate, maybe not the appreciation potential of some of these other places that I'm mentioning over the long term, but you're so close to the beach. You're so close to so many nice restaurants and shops. University is right there. You just can't go wrong in an area like that.
Yep, for sure. And one thing from the investment side of things, you brought this up a little bit with short-term rentals, but if you're looking to buy in this market, please understand that the short-term rental laws are changing very rapidly across the entire country. So do not make a decision to base your decision of buying an investment property based off of what you can rent it for from a short-term rental basis. Know and understand and feel comfortable with whatever that long-term rental aspect may look like, because that's most likely going to change. Wherever you are, whenever you are, like you said, there's some things pending here in San Diego, but there's things that are going to change pretty rapidly all over the country that are going to make that either more difficult or non-existent, not possible. So make those decisions off of long-term rental outcomes.
Or talk to your neighborhood real estate agent and lender to give you some more information on the specific areas that you are looking in. We might have some people you can talk to. Snake Juice is asking or saying, my wife and I own our mobile. By the way, Snake Juice, that's just a fantastic name. My wife and I own our mobile tiny home. We can't even find an affordable lot to rent in San Diego. Lot rents in San Diego are more than a standard apartment here. Yeah, I don't really have input on this. I have zero experience in this. Because I would imagine because it's something that's not really done a lot here in San Diego County. Danny, do you have any insight you can add on this?
I mean, that's the tricky thing. You're exactly right. And when you think about real estate in general, really the real estate and the value of real estate is more so in the land. Even if you buy a multifamily, even if you buy a condo, it's the location, right?
Mhm.
The three rules of real estate are location, 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 right? And so the truth is real estate and land is just so much more expensive here for certain than a lot of other areas. When you look at an appraisal here in San Diego, the cost of building the actual home itself is relatively the same all across the country. There's slightly different adjustments based on certain things, right? But when you look here, let's say you have a $600,000 place, about 150,000 to 200,000 of that is the actual structure. The majority of that value is in the land that it sits on. And so there's really no way around it. I don't know where you're currently living, Snake Juice, but it probably is absolutely true that even just a lot to rent and put your tiny home on here is more expensive than an apartment in a lot of different areas in across the nation for sure. And there's no way to combat that. It just is one of the necessary evils of San Diego, I guess.
The way to combat that, I would think, would be to buy your own lot of land and then rent it out to other people as well, because then
There
you
you
have an
go.
opportunity to build money. That's what we do here in San Diego. I'm
There
going to
you
come
go.
right back to Mike D here, but I wanted to bring this up because it kind of made my head hurt. No positive in SD, not anytime soon, only appreciation. I have no idea what you're saying, Christian. So if you want, Danny, can you parse this at all?
I don't know exactly what no positive in
Christian,
S.
if you want to rewrite that, we're more than happy
We'd
to
love to
answer
answer.
your
We'd love to have
question.
any of it.
Friend of the show, Mike D, with the scariest icon that on our channel, wants to know from Snake Juice. Snake Juice, please let Mike D know: are there any good places in San Diego to buy a tiny home? Because he's not afraid of the expensive rental fees. Minnesota, tiny homes can be hard to find. Lots for not allowed on private property if it's mobile. Okay. Yeah. Oh, okay. So I'm reaching a little bit here. I'm gonna say I might not know this fully throughout, but I believe in order so I think it would basically have to be a mobile home park, and I don't believe you're allowed new places are allowed to get licenses for mobile home parks. So I think that actually might be part of the issue is mobile home parks are being sold off and they're being turned into other things, but there's no more licensing allowed for new
Mhm.
mobile home parks. So I could be totally incorrect on that, but I do remember listening to a Bigger Pockets podcast episode about that a while back. So does that sound about right to you, Danny?
I think you are correct there. Yeah. Yep.
All right. Dot said, I think he was referring to my question.
I like it.
Okay.
They're having conversations. They're talking
Okay.
about things.
Yeah, they're doing it. They're doing it. Appreciate you
Things are
guys. I follow my misunderstanding in San Diego now stuff. Okay. Now they're having side conversations. Guys,
I
you,
like it.
you talk to us too. No, have fun. Talk to each other. It's all good. Good area advice. Okay. So that's it. Any last questions today? Don't forget to follow our friend Danny. Danny, what is your Instagram handle?
Instagram is Danny_D_IG. I know it's not real estate or mortgage related, but I do provide a lot of really good content there. And follow my YouTube channel as well. We've got a whole whopping 2 subscribers compared to Dan, but our
Which
goal is
is
to
your
start to
wife
build that out.
and your mom, I think, right?
Probably, I think so. Yeah, I think so. And my mom doesn't even know she has an account. So, um, but yeah, no, follow our YouTube channel. We're going to build that out and be able to start providing a lot more content related to specifically, rates and mortgages and how that changes. There are things changing in the mortgage rate environment right now. Things are functioning differently than they've ever happened as far as the mortgage market. And there's more changes coming up that have already happened or are happening throughout this year, that all of the ways we think about financing and all of the rules we have in our head, we need to really place those on the back burner and speak to somebody that really understands what's happening in today's market so that you can be in the best situation, because there are a lot of opportunities to take advantage of, and you just need to be able to know what those opportunities are.
I love it. Well, you guys, Danny, I've worked with Danny on more transactions than any other lender here in San Diego by a long shot. Him and his team are really good at what they do. And what I love is actually you guys are just advisors. You're like me in the terms of like you just like to give out information for free. You want to make sure that people have the right information so that they can make a good decision and help analyze all this stuff. And if they end up working with you, great. If not, great. Like we're here to help people,
100%.
and we really appreciate about you. Me and my team, my team and I, we are going to be at your office all day tomorrow. And we're doing a really fun sales improv class, which is going to be really, really great. But I appreciate you being on. Everyone watching, if you're ever looking to buy or sell a home here in San Diego County, myself and the Best Life Home Team, we would love to help. Danny, I appreciate you. Until the next time.
Appreciate you, man. Wonderful. Thank you, guys.
Peace.